Thanks for joining us at XM.com. This is the Weekly Outlook. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian. The unfolding crisis in Ukraine, Rafi, has certainly grabbed global headlines this past week. And although the story is likely to keep developing, the upcoming week also has a lot of events for investors. So let's start by having a look at the Reserve Bank of Australia. It meets amid strengthening expectations of a rate hike this year. Could policymakers signal anything on that at Tuesday's meeting, and how could the Aussie move?
Well, Christina, it's going to be an interesting meeting because just as all the central banks were trying to shift towards a tighter policy, especially when it comes to the laggards in this sense, such as the RBA and the ECB. We've got a fresh crisis on our hands, so, there are some concerns about the growth outlook, but this is mainly affecting Europe. Now, when it comes to Australia, we've seen actually a massive surge in commodity prices because of the Ukraine crisis, because of concerns about possible disruption to supply from Russian exports, not just oil and gas, but also commodities such as wheat, corn, and some base metals as well. So the Australian dollar has been surprisingly resilient throughout this crisis. So the RBA will probably not be too worried about the situation in Ukraine just yet. The question is, the RBA has so far, even before the developments in Ukraine, had been kind of resisting in terms of giving very clear guidelines on when it expects to raise interest rates, and it's doubtful whether or not we're going to get that on Tuesday either. And now at the last meeting they ended their QE program, but it's probably too soon for them to start signaling or at least giving a specific timeline when it comes to rate hikes. So we might not really get much out of the RBA. Instead, investors might turn to the GDP numbers for the quarter, which is expected to have rebounded strongly, and of course, in addition to the positive outlook for commodity prices, we haven't really seen rate hike bets being dampened that much as far as futures markets are concerned. So nevertheless, it's going to be fairly interesting to see whether there's going to be any shift in tone coming from the RBA, and of course, how strong that GDP data will be.
We also have another central bank meeting coming up this week. The Bank of Canada meets, and there are strong expectations that it will join the Bank of England and the RBNZ in lifting rates. Despite that, though, the Canadian dollar is trading at 2-month lows. Therefore, what are we likely to hear from Bank of Canada policymakers, and could it boost the Loonie much?
Well, I think it's pretty much been baked in the fact that we're very likely to get a 25 basis points rate hike. Now there's a slim chance we might get a double rate hike because the last inflation numbers were pretty strong. We're also going to have GDP data coming up as well next week on Tuesday. Now those could be fairly strong as well, but there are some downsides to the growth outlook in Canada because there's this ongoing truckers protest which could be weighing on growth. The last jobs report wasn't that strong either. And now, of course, we've got the crisis in Ukraine. Now, you could argue that because oil prices are surging on the back of the war in Ukraine, then that's positive as well. But nevertheless, we do have clouds gathering over the global growth outlook. So the Bank of Canada will potentially decide to play it safe and just go with 25 basis point rate increases. Now, we also have an OPEC meeting coming up next week as well, which could impact the Canadian dollar. Although we're not really expecting any changes at the OPEC decision, they will probably stick to their existing plan of gradually raising output. Now, Saudi Arabia, we know, is under pressure from the US to pump more oil, but they're probably not going to give in to pressure just yet because they're probably going to they probably have a very high bar in terms of how much higher oil prices would have to go before they intervene. So as far as the Loonie is concerned, the main focal point will be the number of rate hikes that Bank of Canada will signal for the rest of the year in terms of how steep they see the rate path.
Let's cross into the United States now, as the calendar is packed with economic data coming up this week, with the highlight maybe being the NFP report out on Friday. What could we see in the numbers, and what is the outlook for the dollar?
Well, now if you remember, the last jobs report was much stronger than expected, and we had all this speculation about the Fed going in more aggressively. But we're expecting a slightly more moderate jobs growth of around 380,000 for the month of February. The jobless rate is expected to tick slightly lower to 3.9%, and we are expecting a slight acceleration in wage growth. Now, all of this, of course, would support the case for a 50 basis points rate hike at the March meeting. We're also going to have ISM PMIs. Those are very closely watched as well, and those are both of them, the manufacturing, non-manufacturing, expected to edge up for the month of February. But given what's happening in Ukraine, I think maybe the data might not have such an impact, and instead they might want to wait to see what Fed policymakers will have to say. Now, we've heard from a few Fed officials this week. We're going to have a few more speakers coming up next week. So far, we haven't really seen any dramatic shift in terms of where they see policy headed because of the Ukraine crisis. But of course, the war has only just started. It's too soon to say what kind of an impact it's going to have on global growth and on inflation. So that's also going to be important for the US dollar in the coming week.
And of course, the ongoing crisis in Ukraine is very important for the Eurozone area. The euro has fallen victim of this ongoing crisis. Can Eurozone inflation numbers out this week offer the currency some much needed support?
Well, before the crisis, the answer would have been yes, because we are expecting CPI to reach a new all-time high for the euro area, to rise to 5.3% from 5.1% in February. But of course, because the Ukraine conflict is so close to the Eurozone economy, so we're not just talking about impact from inflation from the surge in energy prices. We're also talking about some economic impact. We could see business confidence taking a hit, and in terms of energy prices as well. I think there's a real worry that if we see an even bigger increase in fuel bills for households, we could get an even bigger hit to consumption because people will have less money to spend on other goods and services. So the question is now whether or not the ECB will push back the calls to halt its bond purchases sooner rather than later. Now, before this crisis, the expectations were that the ECB at the March meeting would probably decide to bring forward the date that's going to end its bond purchases. Now that's not looking so certain. So the euro, of course, could struggle still in the near term, at least up until we have a clear idea of what the ECB is going to do, and also what the impact is going to be from the Ukraine fallout.
Rafi, it was great having you with me today. This was the Weekly Outlook. Thanks for joining us here at xm.com.